Morning, Steve Free in Chicago with the morning grain comments. We have a quiet mixed trade overnight with beans and wheat a little bit lower, corn a little bit higher outside markets. Also kind of mixed with stocks down and the dollar right now is at 23-month lows, and that has slowed some of the farmers selling in Brazil and made some of our exports, especially hard wheat to Germany, competitive. Our bean price to China is competitive, but our corn prices are still too high versus the competition, and soft wheat is still too high versus the rest of the wheats. Russian wheat is still cheaper than U.S. hard red winter wheat, so that kind of raises a little bit of questions about demand. Will China come in and buy more U.S. beans? Will China buy some corn? There was talk yesterday that as much as 15% of China corn and soybean areas might be impacted by all this flooding. So if we drop their crop 5%, it means that maybe they need to come in and buy 15 million tons of corn. There's reports that they've already bought 7. So whether or not they come in and buy additional corn for import demand, certainly their import margins are positive. And whether they buy it from us or Ukraine is still an unknown. We did see last night one private crop person estimated the U.S. corn yield at 180.5. That's a 15.2 crop versus USDA's 15 billion. And that 200 million bushels would probably add to the carryout. And again, I'm a little bit concerned about USDA's 2021 corn, soybean, and demand numbers pushing higher. I don't know if we'll actually see that increase based on the COVID situation here in the United States and restaurant demand down and global export trade also down. So that would also add to the corn, soybean, and wheat carryouts from the USDA numbers, and some people think that will push corn futures in the fall below $3 and soybean futures in the fall below $8 and limit the upside in wheat prices. As far as weather is concerned, we're going to see some scattered showers across the Midwest this week. Next week, the maps go a little drier with a cold air mass coming in from Canada. Some people, it's interesting, the weather guys have been saying pretty much all summer that the long-range maps are too wet, and now they're saying that these second-week maps are too dry. All in all, though, it looks like we're going to keep these crop conditions favorable and add to the supply, which is negative to prices. Managed funds continue to be long beans, short corn, and they short meal versus oil. And it doesn't look like anytime soon they're going to get out of those positions. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember to treat people like you would like to be treated yourself.